Hello, everybody, and welcome to this discussion jointly hosted by ORS in India and MLI in Canada on the Indo-Canadian partnership and how it applies specifically to questions of sustainable finance, financing the costs of carbon mitigation and adaptation, which is, of course, of major concern to both India and to Canada. Um, Canada is an extraordinarily important source of regulatory leadership, of capital. India is one of the major destinations of green finance and has made increased commitments to climate change action, to climate action, particularly following the 26th Conference of Parties, COP26 last year. But that's all contingent on getting private finance moving. And I'm going to move to my very distinguished panel now that are going to discuss about the ways in which the partnership between India and Canada can be used and can help create this bridge for private capital between Canada and India. And I'm going to introduce them one by one as we go along. And as I introduce them, I'm going to ask them to say a few words about the subject that we're talking about today. And I'm going to start perhaps with Sarah Alvarado, who is Executive Director of the Institute of Sustainable Finance in Canada. Sarah, if you don't mind, could you kick off the discussion for us very briefly?
Thank you, and good morning, good afternoon, good evening. Thank you, Mahir, co-panelists, and rest of the organizers for the kind invitation to participate in this discussion. We are at a crucial moment in our race to net zero globally. We are moving from convincing people that climate change is for real, from commitments and from setting strategy, into the critical phase of execution. And we all know that this is the most challenging phase. While green is global, transition is local, and every jurisdiction will be looking at the specific economies, challenges, but also great opportunities. As Mark Carney has said multiple times, this is the greatest economic opportunity of our lifetime. Transition to net zero will bring jobs and investment opportunities in the enabling technologies, but also infrastructure. So, to wrap up my opening comments, I've been saying now for a little while that it is very important that we become a little bit more multilingual, and what I mean by that is the languages of policy, sustainability, technology, and finance, because they're all key factors in this formula for achieving net zero, and they are moving in parallel. So thank you, and back to you, Mahir.
And thank you very much for that. If I may now turn to my old friend, and if I may say so, a colleague, Ila Patnaik, who is a professor at the National Institute of Public Finance and Policy in India. And Ila, if you could take us through.
Thank you, Mihir. I think this is a very important time for having this discussion. And this discussion takes place right after COP26, when India made higher commitments to uh, sustainable growth. And we would, at the moment, look for building infrastructure, money coming in, all supporting our transition to a more green GDP, to more green investment, to more green infrastructure. I think the biggest challenge that we face is that as we speak, even in the more advanced economies, it even while there is money saying that it would go into green projects, it is not clear what should be the standards, what should be the disclosures, what is green, what is sustainable, what is climate friendly. And there are principles based, rules based, various kinds of standards that have been put out. India is also trying to improve disclosures, maybe have third party think about and talk about third party verification. But I think to be able to attract this increasing amount of money that is being committed, including in Canada, which is very, very important for us. To be able to attract that, we need to face this challenge, work much harder. And it would be great if we could have if we could take this dialogue forward and we could, find ways so that money, on the one hand, capital that is being committed to green finance is something that India can attract, that Indian companies can attract, that Indian projects can attract, to pull in, both people like you, pull in regulators like SEBI and RBI, pull in governments, so that we are able to come to an agreement, that because these standards are constantly changing and there'll always be, some emerging economies typically lag behind, but we don't want to lag behind because we need the money. So I think one of the top things on the agenda for developing a partnership between India and Canada would be to define what is green finance, to find out ways through which we can agree that whether it is sectoral, whether it is financial disclosures, whether it is third party verification, so that we can agree on that, the what is the taxonomy, what is green, and at a particular point of time. I think that is something that I would like to see as the outcome of some of these discussions that we are starting today. Thank you.
Thanks, Ela. And we will get, I think, deeper into some of those questions, particularly of disclosure, later in the discussion. I'd like, the third member of our panel is Adam Ledane, who is Vice President at Azimuth Capital Management in Canada. And Adam, if I may turn to you for some initial thoughts.
Yeah, thank you very much for having me. One of the reasons I'm so interested and excited in climate change, and more specifically kind of CO2 mitigation and avoidance, is it is a challenge that is border agnostic. It doesn't care what country it comes from or influences, but it also is super kind of focused and regional in that the solutions and challenges respectively are very much dependent on the region and where it is on the development curve and the kind of natural resources, be that solar energy, otherwise. And so I think conversations of this nature, where you have international exposure, international idea flow, but still pretty focused between two countries or groups of humans, is a part of the conversation that to date has been a little bit underrepresented, and also I think a very critical source of ideas and opportunity flow between regions. So very excited to be a part of today and see what we can build together.
Thank you, Adam. And finally, our last speaker will be Akhilesh Tilotia, who is a principal at India's NIIF, which is a new and very successful idea for blending finance from the private and public sector for infrastructure investment into India. Akhilesh, your first thoughts, please.
Thank you, Mihir. Excited to be here. Indeed, I must start by saying that NIF is also a good example of India and Canada partnership. We have Canadian pension funds as investors, both in the asset manager as well as in many of our funds. We have recently worked very closely with another large Canadian pension fund to help put together what we call as NIF's Green Frontier Initiative. We've put together investors from across the world, local investors, bankers, both local and global, RBI, which is the local central bank, many policymakers, and a few companies which are in transition businesses, which is in solar, EVs, etc. So put together a consortium of people who will be deeply impacted by the changes that are taking place with respect to climate change and are at the intersection of finance. We put a report out on India's green future in collaboration with many of these organizations together. And again, as part of this conversation, happy to have conversations around India's green future and what we've learned as part of this coalition going forward. I must also add that NIF remains committed to ESG, and we are significantly responsible not only to our investors with whom we sign strong ESG commitments, but also to the local areas in which we invest and we work closely as part of our CSR responsibilities in many of these areas to ensure that the transitions that take place are just. So excited to talk about this here. Thank you.
Thank you, Akhilesh. Right, let's get into some of the issues at work here. Sarah, you work quite a bit with institutional investors in Canada. Could you take us through the way they think now about incorporating ESG, environmental, social, and governance considerations into their investment decisions? And more particularly, what are the conversations that are happening in Canada about ESG criteria for emerging economies like India? Is there a difference between how they view ESG qualifications, criteria for emerging economies and for the developed world? Is there no difference? Should there be one? What are your thoughts?
Okay, let me break down that question. Is a very important one. It has a lot of components. Investors here are already looking into incorporating ESG into the whole process. And then you think about the process of frontline investment, risk management, compliance, disclosures, and so on. So it's just the whole process. And I can point to the recent work done by the Bank of Canada and our regulator, OSFI. The superintendent, they run a pilot project with two of the largest banks and a few insurance companies to look at this dynamics, right, of what does investment look like, what does risk management look like in order to mobilize capital into sustainable finance. So that addresses the first part of the question as to what are we doing here? You know, the market is involved, the regulators are involved, the central banker is involved because it pertains to everyone, not only across Canada, but also international money flows. And then on your second part of the question, I think it was, you know, what are they doing in terms of looking at external dynamics, right? International dynamics and money flows. And Canada has been known for investing abroad, right? We have significant investors locally, but they also look internationally for investments. And what they would be looking for is, in addition to country risk and then sectoral risks, they would be looking for the same things that they look locally, right? Good disclosures, good auditing standards, good source of data, timely disclosures is important, right? And communication with the participants in the market. So I think that would be very important from Indian companies who are seeking to attract capital to make sure that they do have that data available, those disclosures, and importantly, the plans to decarbonize. Those are being very well looked at by investors.
Thank you. And you bring up a point about disclosure frameworks, and which I think is something which, from India, Ela Patnaik is very well placed to answer. Ela, what are the frameworks that we're working through in India for disclosure, for climate-related disclosure in particular? What are the pitfalls of coming up with these frameworks? Have they worked in the past? How do we get companies to actually do things in the way that we want? Do we have the regulatory capacity to do it?
You know, the first disclosure framework that came up was in 2009 by the Ministry of Corporate Affairs. And they published something called the Corporate Social Responsibility Voluntary Guidelines. And then a couple of years later, this was superseded by something called the National Voluntary Guidelines on Social, Environmental, and Economic Responsibilities of Businesses. And, you know, these were kind of the first voluntary guidelines that tried to help business rethink their businesses in terms of society, environment, human rights, ethical, transparent governance systems. But the reporting on sustainability matters became mandatory later. So till 2017, it was really not mandatory. But then with SEBI started as part of its annual report in about 2012 to include something called the business responsibility reports. And then in 2017, SEBI is the securities regulator in India. SEBI issued an advisory that integrated reporting should be adopted on a voluntary basis by the top 500 companies from 2017, 2018. These then in March 2019, the Ministry of Corporate Affairs revised and released their guidelines in the form of something called the National Guidelines on Responsible Business Conduct. So all this effort had been made, a beginning had been made, but it is really more recently when something called the Business Responsibility and Sustainable Reporting has been required by SEBI, where it says that the top 1,000 listed companies by market cap, so the top 1,000 by market cap, they are required to report on a voluntary basis from 2021 and then on a mandatory basis from 22-23. So really what we're looking at is that from next year onwards, mandatorily the top 1,000 companies, listed companies of India, will have to report some of these ESG reporting standards, which are based on a number of questions that have been integrated into this framework. And actually, some of there are a number of challenges on how businesses can respond, what businesses are trying, and some of the challenges that they face. And this is going much faster than what businesses expected. But this is broadly where India stands on reporting frameworks.
Thanks, Ela. And I think we're going to return to some of these questions a little later in this discussion, particularly on how we can harmonize reporting frameworks across boundaries, national boundaries. But I want to turn now to Adam for something maybe a little forward-looking here. Adam, your firm is particularly interested in investing into the energy transition. And in India, we've had some success in the past with attracting finance to renewable energy in particular, to solar energy above all. But I wanted to sort of ask, are there any other energy, are there any other technological innovations on the horizon that you think are particularly interesting for emerging economies like India, for countries at India's level of development and aspiration? And if so, do we need to be thinking about different financing structures for those particular sectors, different, that is, not just from the legacy energy sector, but also from solar power?
Yeah, a lot to unpack there. I'd say, firstly, just from a kind of a technology standpoint, one of the things that our company does quite frequently is if we say that we see opportunity in a particular sector or technology or even just a problem, we'll kind of take a global lens and look at all technologies that are in that area at a certain level of development. And what we frequently find is, if let's say the answer from that process is 40 companies, the 15 to 20 that are in kind of the North American and Western Europe region are well understood and valued at a number that's very difficult to stomach. And then there will be kind of 15 or 20 often from areas of the world that the energy transition spotlight is less directly trained on, such as India, where you have a technology that is at the same level of advancement and proof as opportunities that are perhaps located in California, for example, but at a much more attractive valuation point, especially on a relative basis. And so I think, to kind of pivot the question a little bit, I think there is plenty of technologies and opportunities that are ready today for commercial capital, but are not well understood or well identified by kind of the global sustainable finance space. And so I think one challenge that we at Azimuth often kind of fight against, if you will, is a mentality that energy transition will be solved solely from technology advancements that we don't know of yet. And that'll certainly be a large portion. But I think in the interim, there's a ton of opportunity for kind of those intermediary steps where you are taking tech that is either ready to go but not in the spotlight today, or taking technology often from a adjacent industry where you can make minor tweaks and take, for example, wastewater technology that can be applied to lithium extraction, or waste management tech that could be used to produce hydrogen. Areas where you're just kind of being a bit more creative with the shift, rather than saying we need to start from square zero and do a breakthrough from all the way through to commercial scale, because that just takes too long and takes too much capital.
Thanks, Adam. Right. Akhilesh, what I wanted to ask you was something that, in fact, emerged from all three speakers, emerged as a consequence of the points that all three speakers have made. As somebody who's sort of at the point of the spear in India's effort to try and raise capital for these projects, do you feel that where do you think the bottleneck lies in terms of information? Is it that we don't have stringent enough reporting standards, or those reporting standards aren't properly understood? Is it that institutional investors abroad may not have invested enough in discovering and understanding the risk profile of projects here? Or is it, as Adam says, that these are sometimes, new technologies which, you may understand in our home locations, but aren't putting the effort in to understand abroad? What's the constraint? What's the bottleneck?
So I think, and that's a point that you also made me here when you started out, is that there are technologies for which India has attracted significant amounts of capital, both technologies as well as deployment. And solar, for example, or onshore wind are very good examples of that. Indeed, if you look at the EV transitions that are beginning to take place, and if you look at some of the electric vehicle companies that are being valued in India, again, fancy valuations that you begin to see here in some cases. So for technologies which are commercially viable, or at least people see a pathway to seeing that this is something on which you could potentially earn returns, there is a lot of capital which is available. And indeed, the Canada-India corridor has seen significant flows of capital into many of these technologies. I think the challenge is less so on the disclosure and the reporting side, because across the world, I think people are still trying to figure out what is green. The taxonomy of it needs to be finalized across the various geographies. How do you identify what is green and what shade of green that is? All of these are questions that the world over regulators, issuers, companies, etc., are all trying to figure out. And I think India is not particularly worse off in terms of the sort of disclosures that it potentially does. The BRSR point that Ila mentioned, of course, holds. SEBI has now made it mandatory. So you will see a large volume of information come through starting this fiscal year, FY23. So disclosures are not so much of a challenge. I think where the challenge is that for countries like India, India has a very unique, and emerging markets in general have a very unique price points at which some of these technologies become viable. So, for example, if you look at some of the technologies that India could do well to deploy are, for example, offshore wind. This is something that has become very popular, especially in the North Sea and also now in the Southeast Asian region. But the price points at which such technologies come in, whether at the capex or at the opex, and hence the revenue that is expected either from the state or from the consumers, does not tie in with the India price point at which it is viable. Same things hold for a wide variety of things, including, for example, green hydrogen. So one of the innovations that is required in India is to see what sort of price point, how do you get the green premium, as Bill Gates would say, down to zero or maybe even negative, such that it becomes a technology which is viable, with people, which the consumers can themselves adopt. And once that begins to happen, I think it unlocks a lot of investments that can come into India. Now, having said that, because a lot of technologies will be very evolutionary, it's not obvious which of these technologies will also win in many of these transitions. There is significant requirement for patient capital and capital which is willing to take risks, and also willing to deploy behind some of these currently costly technologies, which with scale could begin to come down in terms of the acceptance here. And to that extent, one of the things that we work on is what we call the 5P framework, which is that not only do you need public money, you need private money, you potentially need philanthropic money, which can bring in the impact investment angle to it, which is willing to take some more risks. There is a policy element to it. And finally, all of these things need to work together in a partnership for some of these transition related investments to kick through. So for commercial, I don't think there is significant dearth of capital, but for many of these new transition things, a 5P framework is required.
Thanks, Akhilesh. Sarah, I'm going to turn back to you because now I'm going to maybe, we've heard from Ela and from Akhilesh that Indian reporting standards have been improved, and there's a lot of data that's going to be coming into the system. My question is essentially that, great, that data comes in, companies will have reported what their environmental action is, what their footprints are, various inchoate ways. How is it that you will be able to, or people in your position in Canada will be able to explain to concerned investors that this data is accurate, this data is trustable, that the format in which it has been presented is not greenwashing? What is it that we need to do to ensure that concerns about greenwashing don't serve to interrupt what would otherwise be a fairly effective flow of capital into some of these projects?
Thank you. And this is the issue of disclosure is a key one because, as we know, investors are relying on that disclosure, be that the accounting side in our previous world and now accounting plus sustainability. So they rely on that disclosure to make investment decisions, and they would like to make informed investment decisions. So when we heard Adam and we heard Ela talk about some of the disclosures, first they need to be standard, right? And then they need to be comparable across jurisdictions because you're selecting one entity versus another, right? So they need to be able to be comparable, they need to be standard. And also when you're looking at the disclosure, in particular on GHG, we at the ISF just published a report looking at the companies in the TSX, for example, what were they reporting? And very importantly, in addition to the reporting, we were looking at what were their plans to decarbonize. So not only reporting as of today, this report is available online, by the way, but not only what they are reporting as to GHG footprint today, but what are their plans to decarbonizing? Because investors are going to be looking at those plans and are also going to be looking at how are the companies executing vis-a-vis that plan. So that's important. The second point on the disclosures is that of data, right? Because it is challenging these days to get the data standardized. There's multiple sources of data out there, but they're not necessarily standard, right? We're not comparing apples to apples. So a lot of they need to dissect this data, organize it, make it comparable. That is the second issue. And then to your last point of the question as to what are companies or what are we doing here to avoid greenwashing, I think you're looking more at the very tactical level as investors look at analyzing companies and looking at what are they reporting, and again looking at their plans and probably having the one-on-one conversations, right? For the significant investors and the large banks, they will be looking at having one-on-one conversations with management and trying to get some information there. What are your plans? Are you serious about it? And can you achieve? So it is very challenging, but I find the onset should be standardized data, that it is audited. You have third party that is credible looking at auditing this data. That's going to be super key.
And that leads me, I think, almost naturally into my next question for Ela, which is, I think two things emerge from that, those points that Sarah was making. The first is it requires a bit of work to, have external validation of some of these claims that the companies are making about data. Do we have the capacity in place in India? Will we be able to develop it to create that external validation of one kind or another? And the second point being, are we thinking about comparability of our standards? We are working on taxonomy, we're working on, disclosure, but to what degree in Indian policy making on these subjects is comparability across national jurisdictions a factor? And, I say this knowing that typically for Indian regulation, it is not. But is this an exception?
So, Mihir, I think the first point to understand is that there is very little comparability even globally. So there are a number of standards, and there are attempts being made to make to harmonize those standards. So, for example, the most promising development is the International Sustainability Standards Board, the ISSB, under the IFRS, and they are supposed to develop a global baseline of investor focused sustainability standards, so that there is global consistency, comparability, reliability of sustainability reporting. So it is something that is not coming from within India, but that if the US standards and EU standards are different, then Indian regulators have an even harder job, because they can barely figure out what is the standard that they should try to meet, what should the standards that they should adopt, and so once there is a bit more global progress, then Indian regulators will be able to go forward. But I think there's also a very big question for companies, because the ESG departments are hugely resource constrained, and actually often it is said that these are the least resource department in the organization, even in the case of very large business houses. And they're focused on regulatory filings, compliances, and then suddenly they have even bigger challenges in terms of stricter timelines. And there are increasing number of questions and disclosures that need to be made. So I think even before we come to the question of whether regulators have the capacity to look at these, do third-party audits, we are today at a situation where even companies are going to be struggling to make these disclosures. Now, so resource constraints is one of the issues. Another issue is multiple reporting. So there are guidelines about the ESG information that is required by regulators, by stock markets, by rating providers, and all this means collecting high quality data, reporting it in multiple formats, and that there's already reporting fatigue. I mean, we do that even before we talk about sustainability disclosures. Already there were issues. Then there are complex reporting frameworks, and they're tedious, cumbersome, and companies haven't done it till now. So, for them, this is something new. Over and above all this, there are apprehensions about data misuse. So companies are hesitant to disclose data because, our data privacy and laws about data are still in progress. They are not they don't inspire adequate confidence that the data would not be misused. There are knowledge and skill gaps. So between there are knowledge gaps between regulators, industry about data, disclosure requirements, skills about what is required to create a comprehensive sustainability report, and what is available at the company and what the company should be doing. I think in India, there's another question, and that is the lack of understanding of the wider benefits of ESG reporting. So some companies in Europe and America have lived with a system where they've seen larger benefits of assessment and reporting. And for India, this is going to be something that is new. And most businesses are not aware of the larger benefits of ESG integration into its business strategy. And they kind of see it as a compliance issue, as reporting burden, as increased cost. And there is resistance to invest sufficient resources, people, time, systems, capital, that's useful for investors. So it's there are multiple challenges in both at the level of companies, and then we are going to face most of these challenges at the level of regulators as well. But of course, I think the bigger are the pools of capital, the more would be the incentive to try to face these challenges.
And I think that's a good opportunity to start pivoting our discussion over to the exact ways in which the Indo-Canadian partnership can in fact help. So we have to expand the scope of of capital available. We have to expand the benefits that appear to accrue to companies in India from doing this kind of disclosure. Akhilesh, so we've run into a couple of issues here, right? So we've run into questions of capacity. We've run into questions of comparability, right? And I think that these are the two C's, to go with your 5 P's, that we're going to have to worry about. Now, how is it that partnerships, such as the Indo-Canadian one, can help get this, overcome these barriers? Where should we be working? Should we be working at the G20, for example, to try and make sure that harmonization of reporting standards is high up on the level of priorities of multilateral organizations on that? Should we be working together at international financial institutions so that they maybe can take the lead? As somebody, again, who's having to deal with these issues on a daily basis, where should the partnership be focusing its energy? Where is it that in your opinion, that partnerships like the one between India and Canada can most effectively deploy their energy? Should it be at, for example, the G20, pushing forward harmonization as a political commitment, harmonization of standards as a political commitment? Should it be pushing multilateral development banks, IFIs into blended capital? Where is it that this energy should be focused?
Thanks. Let me also add that some of these constraints are also opportunities. And simply because I think, to go back to the point that Sarah also made, is that investors still need to engage one-on-one with many of their investee companies to understand how they are thinking about these transitions. It is not obvious that you can reduce everything to very standardizable metrics that you can compare across either your own portfolio or across the country or across the world. So to that extent, this is going to be a mix and match of quantitative as well as qualitative disclosures, and will require a lot of conversations. And so to that extent, I think there is an opportunity to develop an entire almost cadre of people whose job it is to maybe think about how do you move from the qualitative to the quantitative. The ISSB initiative has been spoken of, and I think even in India, we have an opportunity with, let's say, the Chartered Accountancy Institute or some of the other institutes who can begin to train people more formally into thinking about how they should think about disclosures, what is it that should be disclosed, and how is it that you audit what a third party has said. And this could then begin to become some sort of a more almost a KPO sort of a thing that India could potentially offer to the world. So I think this is evolutionary, and I think as investors and people who manage monies for others, we also need to be cognizant that this is very evolutionary, and we need to support this development of disclosures. And also not get very bogged down with respect to what these disclosures mean in the very first few quarters and years, because these disclosures will also begin to settle down in terms of what they are meaning to convey. And thankfully, the regulatory lens for many of these disclosures has also been of disclosing and not of creating those as targets. And one of the points that Ela also mentioned, I think one of the reasons companies in general across the world tend to get worried about disclosure is that eventually the disclosures will turn into some sort of cascading targets. Either you need to become more stringent or much tighter in terms of how you pollute, etc. So I think there is the genuine concern on both sides of investment and investee companies, and needs to be taken into account. Now, let's take that to the question that you mentioned about how at a more multinational or bilateral levels, countries could begin to coordinate. I think both the points that you mentioned are very important, which is we need to have a broad sense of what will qualify as green as a minimum standard across the world. Having said that, I don't think it is going to be an easy thing to figure out whether green will be the same across the world. Natural gas is, I think, a very pertinent example these days across the world, and many countries have very strong views on whether natural gas is green or
nuclear.
Right, and nuclear, of course. So I think there will be a level of basic standardization of what is green, and then there will be significant localization that people will need to take into account. Also, linking back to the point about what is viable in particular economies, what is viable in a particular developed economy may or may not be viable in an emerging economy. So to that extent, which brings us to the second point, how do you find patient capital, more risk-taking capital, which is willing to invest behind some of these technologies to bring down the green premium that we've been speaking about? There is a very large role that multilateral organizations would play, and indeed there is a big role that funds like the Green Climate Fund would play. If you go back all the way back to 2009, when the initial commitment of $100 billion every year being pooled together by the developed world into the developing world was made, and over the last decade we've put in place the institutional architecture through the Green Climate Fund. I think there are lots of such institutions that could begin to come up, and then they can begin to define the sort of requirements that they may have with respect to what they look forward to in their investments. But once such institutions can bring in long-term patient capital and are willing to bet risky projects or more costly projects and eventually bring down costs through a lower cost of capital, I think there will be a significant ability to coordinate across the globe. So yeah, those would be my thoughts on this.
Thanks. I think we're into the home stretch for this discussion now, and I'm going to let Sarah and Ela take us to the end in a bit. But before we go there, Adam, do you have any thoughts on what a successful partnership, bilateral partnership, would look like, as far as your, from your perspective as an investor? What are the kind of energy you want to see from policymakers? What are the direction you want to see policymakers take partnerships, bilateral partnerships, in a way that would encourage you to go out and look at projects in another country?
Yeah, I think from our chair at Azimuth, one of the most valuable activities would just be increased information flow. Because when you look at energy transition investors like an Azimuth or some of the other larger names that have come into the space recently, if you stay regional, whether that's in your state, country, region of the world, there is a set number of opportunities. And that opportunities is dictated by the kind of energy related challenges or opportunities of your area. If there is clean and frequent information flow between a region such as Canada and India, that opens up a totally different opportunity set for investors that are looking at those two spaces, because the challenges and opportunities for India are very different than Canada. Like if you look at the emissions profile, Canada has a lot of opportunities in clean transport and clean fuels, but very kind of a much smaller, at least on relative terms, on construction and manufacturing. That's kind of flipped on the India side. And so that creates a lot of opportunities in whether it's clean cement, clean infrastructure, where you could have a technology that is developed in Canada that is maybe not as valuable from a market or emissions mitigation perspective in that region, but could be much more impactful in the India space. And so I think today you have a lot of groups that are raising money in one country and trying to deploy it in that country. And you have overcrowding, which cuts down returns for those investment vehicles, but also cuts down the impact. If you can have a very consistent flow of information, both from a opportunity perspective and also from a reporting perspective, similar to a lot of the topics we've touched on today, then that just opens the opportunity landscape for private capital providers, which will have a better outcome both economically for them and their investors, but also from an environmental perspective, because you're just deploying capital where it has the largest marginal impact globally rather than being handcuffed to the region that you perhaps have a better understanding of today.
Right. I think that's, I couldn't agree more. And I'm glad to hear you say that. I think we're, as I said, coming to the end, and I'm going to turn to Sarah first. Sarah, I will want your closing thoughts, but before that, I have something to push you on, which is that we heard, you mentioned that, in the end, it comes down to meetings. And Akhilesh, both in their own in different ways, have said that it's about creating a cadre of people. It's about taking that one-on-one, etc., etc., etc. But my experience, which is, I will confess, much more about European institutional capital than North American, is that the big constraint is human, and there simply aren't enough people sitting in many of these rooms in in a large fund or a large reinsurer or a large financial organization within in the center of European capital, who will be able to take those meetings, or if they take those meetings, will know what to ask if they if they're talking to a project lead in an emerging economy. Canada and India have if anything drives our relationship forward, it's people. We have a very, very strong human link. How is it that we can use that to try and ensure that that cadre of specialists that can speak the language of patient capital in Canada, as well as the language of project management in India, is created? What is it that we need to do to create that cadre?
That's I was thinking as you're speaking, because it touches on what the ISF is actually doing. The Institute for Sustainable Finance was created with the key mandate of mobilizing capital towards sustainable finance. So, it is a big mandate, but it can be summarized to how do we move capital towards these projects? And we do that through the 4 pillars of research, education, collaboration, and outreach. So, on the research side, having unbiased research as to what are the gaps, what is preventing these things from happening. And, my reference to the report on the data reporting and disclosures is one of the research reports that I used often as an example. Then on the education side, courses educating people as to, somebody mentioned earlier, I forget the name of who was that, saying we need to educate people as to how important the disclosure on ESG is for attracting capital, right? And so education on sustainability, but linked to the finance needs. So that's our second pillar. Our third pillar touches on your question, and it is the one on collaboration. And what we have been doing on collaboration is precisely setting the table for finance, for industry, for government policy to come and talk about what are each other's challenges, what do you need in order for me to write the check, what are the policy obstacles, or we're sometimes looking at policies that were written long time ago before this GHG was a bigger issue. So, they need to change those. So that's, key and complementary to the research and education pillars is the collaboration pillar. And that's where we try to get, the people, the investors talking to policy and talking to industry and determining what the gaps are. And those conversations can make a big difference. Of course, we're talking decision makers here, right? Closed doors, smaller groups and things like that, which could be beneficial in the Indian environment. And then again, we also have outreach, sitting in panels such as this one, spreading the word, media presence, and so on. So I think, that collaboration pillar is very necessary in all jurisdictions. Also, somebody earlier mentioned, the different approaches to green and transition. And I think, we have green is global, as I said in my opening remarks, transition is local, right? We have to look at each of our economies. What's the landscape, if I may? But then you have green, you have transition, and you have adaptation. They're very different, right? Green, solar, and wind, I think everyone understands it. How do we move from where we are to net zero and that transition, and how can we affect that? That's a different type of conversation as it is the adaptation. Adaptation is we're here already, right? We're seeing the floods, we're seeing the fires, we're seeing, water levels rising, the impact on infrastructure. So that has to be tackled differently. And when you said blended capital, right on. I mean, sometimes, some people have to come in and take the first loss hit. If it makes sense, sometimes it'll tilt a little bit more towards governments. Sometimes when you have the revenue lines, the investors will be there. But, it is kind of like managing where does this fall within the big picture. So I hope that answers your question.
Thanks. It absolutely gets us a lot further along the road. I'm going to turn to Ela to close out the discussion, unless Akhilesh and Adam, you have any final thoughts that you'd like to put in. Ela, in particular, your final thoughts, obviously, but also, where do you think energy in bilateral relations, such as the one between India and Canada, can most usefully be applied? We know that attention is limited. We know that capacity is limited at the highest level in India because there's so much to be done. So where is it that we should be focusing?
So I think that even in international forums and in the climate finance that we see that has been coming, the attention is more on mitigation and very little attention on adaptation, very little attention on how, we know what's going to happen. And given that India is actually got a very, very large proportion of its population who are going to be exposed. And, even if we get, we go really strong on mitigation, but coastal towns, agriculture, a lot of activities are going to be affected even by what is already coming, because of whatever damage already has been done and the warming that is going to happen. So I think that from India's point of view, if we could get Canada to start thinking, talking, working with us on these issues, on adaptation, then that would be one thing where it would be a good, useful partnership. This is not something that is currently on the radar of many of the global efforts that are being made. So that's one. My second thought is that, essentially we are trying to overcome the problem of asymmetric information, which is that you have companies doing something and investors far away trying to figure out what the companies are doing. There are false claims made, unsubstantiated claims made, greenwashing being done. And it's not that we have very great regulatory capacity to deal with this. So it could be useful if we could do joint work on capacity creation, on how, even for regulators, how to come together on an ongoing basis. So it should not be that, okay, we set up one group, finish it, that gives a report, finishes it and moves on, and then nothing happens, or even if something happens. But these are issues that keep evolving all the time and will keep coming up. So there should be forums where on an ongoing basis both sides can be talking to regulators, can be expressing the difficulties that come up, and then can try to resolve them and try to create capacity to resolve them. I think really that's where I think this would be a useful, productive partnership.
Thank you all. I think a lot of issues came up repeatedly in this discussion. First, comparability. Second, capacity. And third, in essentially the sheer scope and access of informational flows. And these are what is crucial for investment decisions to be made. This is crucial for investors. And it's something that I think we should all be looking at, and something that the political leadership in both India and Canada can work together effectively to address. Thank you all for participating. Thank you, the audience, for listening. And I hope you found this both entertaining and informational.
Thank you.
Thank you. Thank you.